Doge gained April while its largest wallets hit a record holding level, and that is the part traders cannot ignore. The price moved about 15% from roughly 0.092 to 0.10886, but futures data stayed quiet. Retail activity remained neutral, average futures order size stayed normal, and the biggest visible action came from whale wallets instead. The pressure comes from 108.52 B Doge and 11 cents level. One is the confirmed signal. The other is the first trigger that can show whether the opening event is becoming a larger operational, market, or user problem. The confirmed setup gives 3 layers. Doge sits above its 50, 100, and 200 moving averages. RSI readings around 64 to 65 are approaching overbought without being listed as there. At the same time, 149 wallets holding at least 100 million Doge collectively reached 108.52 billion Doge, with the holdings valued around $11.6 billion. The baseline should be read through Doge price and above 3 MAs. Those details narrow the story to what is established, so speculation does not carry the same weight as confirmed context. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Doge gained April because the mechanism may be supply concentration rather than futures crowding. A move driven by whale wallets can look different from a retail-driven meme rally. The article data lists 739 transfers worth at least $100,000 in one day, the highest whale transaction count in 6 months. That shows large holder movement even while futures participation looked ordinary. The mechanism sits in whale activity, with 739 transfers showing the structural signal behind it. That explains how the event can change access, trust, liquidity, execution, or pricing behavior. The stress test is retail shift, because a mechanism only matters if it holds after the first announcement, price move, or operational change. That keeps attention on observable follow-through instead of assumption. The impact is a cleaner test for market structure. If whales are accumulating while retail futures remain neutral, new retail demand could arrive later and push into a tighter supply base. But the bearish version is also possible. Whales may distribute into thin liquidity, or the crowd may never arrive. The same data can support very different outcomes unless the next signal confirms direction. The affected side is retail futures, and the active scale or condition is normal activity. That makes the consequence practical, because it identifies who needs to adapt and which signal could change their position. The open question is whether neutral futures activity is early-stage silence or weak interest. Neutral does not mean no trading. It means activity is near its historical baseline. The setup needs price and participation to line up. A daily close below the 50 moving average at 0.10036, combined with whale transfers falling below 200 per day, would weaken the accumulation thesis. The unresolved item is denial signal, and the current limitation is 0.10036. Keeping that gap visible prevents the story from drifting into certainty before 200 transfers supplies better evidence. This is where 200 transfers becomes the discipline check. Until that arrives, 0.10036 should stay separate from the larger claim around denial signal. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Doge gained April, the next signal is the 11 cents level. A sustained close above 11 cents with RSI below 70 and retail futures shifting toward higher activity would support the idea that the crowd is arriving after whales. If price fails and whale transactions fade, April's move looks more like a short accumulation burst than a durable structure. The next trigger is retail activity, not a vague promise of future movement. If that trigger arrives with RSI below 70, the story gains confirmation. If it fails to appear, the earlier pressure remains incomplete. The closing read should stay tied to 11 cents test and RSI below 70, because those pieces show whether the watch item has real follow-through or remains unresolved.